Welcome to the IMFG Quarterly Investment Update. My name is Scott Douglas. I'm a director at IMFG. I'd like to introduce Steve Garth. Dr. Steve Garth is on our investment committee, and Steve's going to share some insights into what's been going on in the last quarter. So Steve, what's been happening over the last quarter? It sort of feels a bit like Groundhog Day since we've been in lockdown for 100 days.
Yeah, it's interesting you use that term, Scott, because in many ways, for most of the quarter, the markets were in a sort of Groundhog Day as well. Equities kept going up, bonds kept going up. It was really happy days until the last couple of weeks of September, and then quite a few things seemed to happen simultaneously.
So what are some of the sort of themes that have come out of the quarter that we've been seeing that stand out and have had an impact?
Yeah, so the themes that really affect the Australian market most of all would be the fall in the iron ore price. That of course affects some of our biggest companies on the ASX, BHP, Rio, Fortescue. And that's actually related to the other thing everyone would have heard about, which is China Evergrande Group, which is a big property developer in China. Now the reason why these things are related is because the Chinese government is curtailing property development. It's putting a constraint on property development. And you can see that the price of China Evergrande has gone down. Now, China Evergrande happened to be one of the largest consumers of Australia's iron ore. So that's why the iron ore price has gone down.
So Steve, what's been happening to markets overall in the last quarter?
Yeah, well, first of all, let's take a bigger picture and look over the last year. And you can see in this chart here that Australia, international markets have returned about 30% in Australian dollars. And the REITs also, which as we know, talking last year, Scott, the REITs had a bad time. They've now returned 30% over the last 12 months. Over the last quarter, for the reasons we've talked about, particularly with iron ore, it's been a more moderate return to the Australian market. It's returned 1.7%. International markets not really as affected by, obviously, that iron ore problem, and they're up 4% for the quarter. Probably the big one, and it's really what we've been talking about, is that the emerging markets are down by 4.5%, and that's completely due to China. Let me show you this chart, Scott, which shows Australia over the last year, China, essentially Europe, and the USA. These are just MSCI indices. But what you can see is Australia, Europe, and the US have all returned around 30% in Australian dollars. But you can see China has returned minus 8% for the year and minus 15% for the quarter. So China is a very large part of the emerging markets. So that's why in the previous slide we saw the emerging markets having a negative 4.5% return for the quarter.
So in our clients' portfolios, I think we've got about 4% maximum in a growth portfolio. In emerging markets, the impact of what's been going on in that quarter wouldn't be that significant, I would have.
No, not that significant. Yeah. And certainly the exposure directly to China Evergrande is minuscule. And because we've already seen the price drop by 80%, it's already been priced in as well.
So Steve, that's a great example of the benefits and the power of being well diversified across asset classes and countries, and it's represented in what's happened in the portfolios over the last 3 months and over the last 12 months. Thank you very much for presenting those themes to us, and we really appreciate that, and we look forward to catching up next time.
Terrific. Thanks, Scott. Yeah, we look forward to seeing you at the next quarterly update.